well, then the Fed were going to intervene with yield curve control. What yield curve control would do would be more printing of money, and therefore more of these assets go up. So we've got this weird cycle. If the economy slows down, which I think it will do in the second part of this year, and inflation will surprise to the downside, it's not going to be as strong as people expect, well, the likelihood is, knowing every single recession, the Fed have generally ended up cutting or stimulating at least 18 months after it. So the odds on chance are that they do it again. So again, that drives up assets, which is a weird world, that assets almost can't go down in price. I know that sounds ridiculous,
right?
But this is the kind of world we've got into. So that's the other global macro, just to give the last global macro bit, is the dollar. Participants going under, the Fed bailing them out, the system freezing, collateral freezing, funding freezing, lending free, all of that. Not one of those things happened. In fact, it worked perfectly because leverage, 100 times leverage, headline, oh my God, it's over collateralized. So guess what? Nobody was left holding the baby. There's no exchanges that didn't get paid their margin. It doesn't work that way. Had that happened in the stock market, Robin Hood will be tapping on the Fed saying, hey, listen, guys, we need some cash here because we didn't get paid on our margin. Doesn't happen in crypto. What about the rehypothecation of assets and the collateral? Doesn't happen in crypto because everybody knows who owns what because it's all on the blockchain. In fact, lending protocols, DeFi, even decentralized exchanges run entirely by algorithms, continue to work.
That's right.
Exchanges went down for maybe an hour because of the overwhelming of their systems, but nothing broke. Nobody got caught holding the baby. Speculators lost money, and the world moved on. That is, I can't express how big a change that is to the world. This is why I got into crypto in 2012. That's what I first saw about it when I was researching deeply, having just gone through the European crisis and the 2008, thinking this system cannot survive. It's too fragile. And I saw Bitcoin and blockchain technology and I thought this is anti-fragile. And we have just proven that in spades. It's amazing.
For those that are out there, hopefully Twitter is running ablaze because that was some incredible quotes and knowledge that you just dropped there. And I agree with you that this is anti-fragile. And you are correct, especially on the decentralized exchanges, as I mentioned in my intro. 46 billion in volume over the last 7 days, and they did not shut down. They ran as they are supposed to run. And so agree with you on that. You have been...
And also no systemic risk.
That's right.
Nobody in the traditional finance world nothing happened.
No. You have been a proponent of going beyond Bitcoin. Now, we at ARCA are very aligned with you, obviously, on that. We have seen this as an asset class where there are sectors where you can do fundamental analysis, and yes, you can, where you can do things like relative value. And so you have also been that proponent as well, too, seeing that this is a asset class. It is not a singular asset. And so I'm curious, how did you get to that point? And then after you answer that question, I want to alert everyone who's listening right now, you can send questions in. There is a Q&A feature here. So if you have questions for myself or Raoul, please send them through. We will try to address them in the next 20 minutes. But I want you to opine about this a little bit. Going beyond Bitcoin, how did you get to that mindset, especially in the face of some harsh criticism from those that do not believe that?
I knew that from when I first got into it. My kind of OG was a guy called Emil Woods. And Emil and Chad Cascarella were hedge fund guys, ex-Goldman guys, who Emil got me into Bitcoin back in 2012 and taught me through blockchain. So he first got me into Bitcoin and then taught me through blockchain. And then he was invested in stuff like Polkadot. God, before I even understood anything about it. But I realized that there was different elements and the smart contract element. And then I started seeing, okay, and I've been writing about this for maybe 5 or 6 years. Okay, everything's going to get tokenized. So I think it's interesting. We've just had the biggest recession in pretty much global recorded history. And what happened is assets went down for a month and then rocketed higher, which kind of left many people by surprise because the pain was real. The Main Street pain was real. The insolvencies were real. The job losses were real. But that wasn't reflected in anything. And what that was a function of was really the fact that the central banks, obviously, and the governments took unprecedented measures, which was unprecedented monetary printing, along with unprecedented stimulus, direct payments. These are all really new things, essentially. And the net effect of that was that assets went up, but wages didn't go up, and a whole bunch of other stuff didn't go up. So what was that all about? That was actually about something you alluded to a minute ago, was actually the value of fiat currency fell. So the denominator for assets fell because those things are relatively fixed. So if you look at anything with a relatively fixed supply, whether it's equities, real estate, gold, crypto, it all exploded higher. Anything with variable inputs, such as corporate earnings over time or wages, didn't really go anywhere. And that was really interesting. And it's to do with this kind of denominator effect that I call it. So many people watching this will be familiar with the charts of the Venezuelan stock market going vertical. And once you adjust it from bolivars into US dollars, the actual market went down. And that's the same thing. When you look at asset prices over this period, they basically went down and went back up into the middle of the range versus the Fed balance sheet or the central bank balance sheet. So I think that's a key function of this market. So now we're in recovery phase, post-crisis. Normally, this phase would be an 18-month bottoming process in markets, but because of this denominator effect, markets have gone higher anyway. So now we've got supply-side bottlenecks that are creating huge rises in some commodities, such as agricultural commodity and oil markets. So that's an interesting point. Other markets like copper are seeing an entire demand shift that's coming from EV and the kind of drive towards green energy, which is another trend we'll talk about in a bit. So we've got what seems to be inflationary pressures, and everybody's freaking out. The bond market's going to collapse, and guess what? The bond market just went sideways. Really, it backed up a bit, went sideways. Could it move? Could yields go up a little bit more? Yes, but what we've got something interesting is if yields went up a lot, i.e. inflation was sticky and massive.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.